afternoon. You're watching ET Now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades today are looking all right because of the sharp, rally that we have seen in the last half an hour or 1 hour or so. Because now we are very close to that 19,700 mark on the Nifty. The broader market enthusiasm really continues. Both those indices are sitting at fresh record highs. The public sector entities, that is where all the action is in the trading session, and different pockets at that. Whether you pick up a railway stock, a defense name, a shipping company, a public sector bank, or even energy names like Coal India, etc., entire segment of public sector entities is on fire today. It's also, what are the top contributors on the index level include names like L&T, which is sitting at record high level. HDFC Bank last 2 to 3 sessions has been doing very well for itself. Today as well, that continues that up move, and then ICICI Bank is participating today. So we are seeing a mild uptick on that one as well. It's real estate stocks that are building on to gains. So the momentum on the upside and the buying really continues in that, while pharma is seeing a bit of a profit booking and select names at that. So we're tracking all of that, Aisha, but overall, very good momentum as far as the headline index is concerned.
Oh yeah, absolutely. We've scaled it up very nicely. 19,700. I mean, it may not be such a big print in terms of the percentage numbers, but the headline number is comforting. And like Anisha said, it's really PSUs all the way. Coal India, L&T, NTPC, they're all powering up ahead. And IT, that's the other underlying trend, because sectorally, if you were to really map what's happening, it's power and IT which is really scaling up higher. So even right now, there's a TechM which is higher by about almost 2%, HCL Technologies, LTIM, Infosys, these are all names which are scaling up quite nicely as we speak right now. But let's get stock specific. There's United Breweries as well, a management rejig which got announced. That's one stock which is in focus. Most senior team members are new within the board now. They've appointed Vivek Gupta as the new MD and CEO for a span of about 5 years. Of course, there is the demand boost which we are seeing across the power segment. Coal India, PFC, NTPC, these are the stocks in focus. Remember, the base August demand is now significantly higher by about 16%, and the peak demand was up 22% on a year-on-year basis. So that's really putting all of these stocks in the focus. L&T, in case you're wondering why that stock is also charging up ahead, they've signed a $4 billion deal with Saudi Aramco. They're the preferred contractor for their Jafurah gas field. So that's another stock which is holding up higher by a solid 4% as we speak right now. But Kunal, in terms of the market construct, purely the index, all good?
Yeah, very good for the index. Good shape up for the Bank Nifty today. Premiums coming back for both the indices. Short covering, as we discussed in the morning, that there was an evidence of short covering across the board for both the key indices, Nifty and Bank Nifty. That has given more prominence to the index movements today. The put call ratio is also on a healthy note, about that 1.2 mark for both the indices, Nifty and Bank Nifty. Large cap stocks making a comeback. So I think HDFC Bank making a comeback, and L&T, for example, that stock is coming out of a deep consolidation. Many large cap stocks looking quite charged up. So that's an attractive part of the market today. And the best part is in terms of the Nifty levels, we are holding about the 19,600 mark broadly throughout the day. So even that adds to a comfort for the index trader. So net bullish on the index, and would expect 19,900 as an immediate target.
19,900 is the immediate target. So I'm wondering what the medium-term target is. What, 20,500 or something?
Depends on your time frame.
Okay,
what
so let's say 3 months.
Term.
No, medium term is 2 months, 3 months,
okay.
6 months.
Let's say 2 to 3 months.
Then 20,500.
Interesting. So 20,500 on the cards and 19,900 in the very, very immediate term. But Naresh, Kunal was also talking about the banking index seeing a bit of momentum. But what about the public sector entities? What's your favorite stock or sector there?
So I've been bullish on the PSC segment for almost a year or more, and consistently been recommending it. So for now, we are seeing a shift in terms of power names continuing to do well. In that, one which is left is Power Grid, which looks very promising. Then apart from that, I continue to like LIC of India, which has been a short-term breakout. Rest, NHPC, various other names in the whole power sector enterprises. So apart from PSU banks, the whole PSE segment looks well. The only stretched place is the shipyard space or the railway space. Apart from that, everything else looks very interesting. We are seeing a breakout in gas name like Petronet LNG after almost many years. ONGC is coming up on a 3-4 year breakout. So overall, the whole PSE space looks interesting. And mind you, this space has lowest participation in terms of, say, institutional holding. For example, A Power Grid has only 3% public float, a ONGC has 3% public float. So overall positive on the whole PSE segment. Power Grid and ONGC look the most interesting ones at current prices.
Right. Okay, let's also welcome on board Jonathan Shizel and find out what he's making of the markets right now. Jonathan, hi, afternoon. Good to have you on the show. It's clearly PSUs, not the most favored one up until I think about 3 odd years back. But in the last 3 years, the game has completely changed, right? And some of these stocks are even looking overheated at these levels. Within the, PSU pack, if I could ask you if you have any favorites, so what do you make of the rally that one is seeing in the government-owned entities?
Yeah, look, it's not surprising. I mean, clearly the indices have done pretty well, and they were looking, fairly good value and under-owned, as has just been mentioned. Personally, we tend to steer away from most of the PSU stocks. We tend to focus on other segments of the market. So it's not a sort of part of the market that we've chased. But yes, there are some pretty decent ones out there. Some of the oil and gas ones look quite interesting. But generally speaking, we tend to focus on private sector rather than public sector stocks.
Okay, that clearly is one, a really bright spot in the market right now. Coal India, of course, is spurting up very nicely today. L&T is the other one which is holding out very well. Naresh, if I could just get you on the charts for both Coal India and L&T, big moves today.
So Coal India has broken out into new 52-week highs, all-time highs. We covered it at the breakout on 235 levels. The move has been much faster than expected. So expecting some bit of a pause at 280 to 90 levels. So not a buy at current levels. L&T is a fresh buy because today is the fresh breakout move. It was consolidating for the last almost 10-12 sessions. About 2770 broke out today. So still a buy at current levels as well as on dips. Next could be going towards 3,000, 3,200 mark on this one.
Okay, so that's the take coming in on Coal India, but look at that spike on the counter today, 7 to 8%. Of course, we have been talking about how the entire power sector and the ancillaries have been doing well. So a lender to power sector like REC, PFC, these are the stocks doing well. Coal India stands to benefit because we have been highlighting the coal shortage that power sector is facing, and if that's the case, the e-auction prices for Coal India will go up. There could be increase in production as well, and all of that augurs well for the entire sector as well, at least for the Coal India company, that is. So those are some of the stocks that we are watching out for. But what else is happening in the market? Well, we have the insurance data which has come out as well. In terms of Max Financial, it's a good report card coming in from them. But for the likes of ICICI Pru, etc., it seems like that they've disappointed the street. We'll also get Harsh shortly to join us with that update coming in on the insurance sector. But before that, okay, we do have Harsh joining us. Harsh, tell us what are the internals and who stood out in terms of the top performer and the loser in the insurance data for the month gone by?
Well, yes. So the August insurance numbers indicate that SBI Life has done relatively very well, and that run continues, especially in the retail space. So you're seeing retail APE, which expanded by 34% year over year for SBI Life. You're looking at overall APE growth also at a very healthy 32%, and new business premium grew 16%. Let's quickly move on. We have the likes of an HDFC Life as well. APE grew 15%, retail APE 16%. Now, mind you, this is the combined book, HDFC plus Exide Life, which it had taken over last year. And you have new business premium growth, which has come in a very solid 25%, largely in line with the guidance there. 20 to 25 was the band. Let's quickly move on to ICICI Pru. Slightly weaker set of numbers. APE has actually fallen 16% year over year. Retail APE, though, grew 12%. So that was a bit of a tailwind there. And new business premium, therefore, fell about 5%. So, of course, your life insurance stocks in focus on the back of that August data coming through. SBI Life, quite a solid set overall. We're looking at 30% plus APE growth from retail for a second consecutive month from SBI Life.
Okay, that's the insurance data coming in. Jonathan, I don't know how closely you've been mapping the Indian insurance sector. Not many players are the ones which are sitting on top, but just wanted to understand what's your thought here.
Yeah, look, it's a great sector. I think, clearly there's a very attractive secular growth opportunity there. There is competition, and I think there's going to be more competition going forward as well. There's a lot of international players looking to beef up their Indian operations and try and gain some market share. But, clearly there is a huge potential in this sector. And, one I think from an investment perspective, it's a very interesting one from a longer term, sort of medium to longer term basis. So, they're good names, good quality names, very well run businesses. So it's a good sector. I like the sector.
That's a take coming in on the insurance space, but the big talking point today is, of course, the movie release of Shah Rukh Khan, that's Jawan. It's opened up to a very, very good review coming in. There is a lot of crowd which is thronging since 5-6 a.m. for those shows as well. Let's go across to Jawan to get a gist of what the initial feedback has been and what does the number crunching suggest in terms of what box office collections could be.
Question for you, are you ready to go for a 5 a.m. show? Because PVR Inox has confirmed that there are 5 a.m. and 6 a.m. shows for this movie. So I think that really tells you the tale. And of course, the numbers speak for themselves, guys. This has broken in terms of advance bookings. Pathan, which was SRK Astara as well, that was, I think, the first of the blockbuster Bollywood movies that actually hit the cinema. So yes, 51.17 crore rupees is what it has clocked in terms of its worldwide advanced bookings. And it's advanced, as I said, it surpassed the opening day records of Pathan as well. You've got the company which secured a whopping 32.47 crore rupees in the advanced bookings on the opening day in India. But it's not just in India. Fans across the world are thronging to buy tickets for this film. 18.7 crore rupees is what they have clocked in terms of advance bookings, guys, for the overseas market. Their film has already sold close to 3.9 lakh tickets in multiplexes alone. You've also got this film which has managed to top the list with 6.5 lakh tickets. It's the fifth position. That 6.5 lakh actually was for Bahubali 2. So it has come in second in rank for this. So that is really the overall ranking record that it has. It's at about 5.57 lakh in terms of the advance bookings. Pathan comes after that, KGF 2. So this is a film, as we all know, that stars Shah Rukh Khan. There's Nayanthara as well. And I believe there's a surprise appearance by Deepika Padukone. It's an action-packed film. It's massy. It's Bollywood. It's what everyone wants to really go and watch. There are fans thronging. They're dancing in the streets as well. So clearly, I think all of this in anticipation of SRK's second hit this year.
Already breaking the records that were set by Pathan, and it's been a stellar month and stellar quarter for all of these multiplexes and the Bollywood film industry. Gadar has done very well for itself. Rocky Rani Ki Prem Kahani, and then of course the Hollywood releases of Oppenheimer, Barbie have been doing very well. Abneesh Roy is joining us from Nuvama Institutional Equities to talk to us about that. Abneesh, what's the first sense that you are getting from people on the ground if you've done the channel checks, and what kind of box office estimates do you have in mind for this one?
Yeah, thanks. We are extremely positive on PVR stock, and we have in fact upgraded our numbers by 5% for FY24 and 8% for FY25 EPS. So we are quite positive on the latest movie. Definitely, we expect 70-75 crore opening day collection from Jawan. And yes, the reviews have been quite positive. See, the reason is essentially three. One is the content in Hindi was quite weak for the last 1.5 years. And then course correction has been done. So if you see, last 5 Hindi movies have all done well. So that course correction has happened. The content earlier was quite weak. Screenplay, director, VFX, everything was weak. And then these things have been addressed. Second, Gadar taught how marketing has to be done. See, earlier what was happening, just a few mass media advertising for the movie was being done. Gadar taught that if you go much deeper into the interiors, meet people and do activation, then it works really well. Similar thing has been done for Shah Rukh Khan's latest movie also, Jawan also. So definitely, third thing is that now we are seeing in Hindi movies, we have South Indian stars also. For example, Nayanthara, Vijay Sethupathi also. So overall, what's happening is Hindi movies are working in South and South movies are working in North India also. We have seen that in Jailer. So definitely, already regional movies were doing well. Hollywood, as you rightly said, Barbie, Oppenheimer, everything did well. Mission Impossible. Now going ahead, what we are seeing is good movies like Ganpat, Tejas, Tiger, Marvels, Fukre, etc. are also looking very promising. My sense is already in the first 2 months of Q2, the footfalls for PVR is equal to or beyond what we saw in Q1. And ultimately, when Q2 numbers will come, my view is that this will break all-time records for PVR plus Inox combined, and there will be number upgrade for the street also. And now, final point, this is in very stark contrast to discretionary consumption slowdown, which is being seen for, say, QSR, apparel for last 3 quarters. Against that, the movies are doing really well. So this shows it's not a discretionary slowdown or impact of OTT. It is just the content was an issue in Hindi and which has been addressed. So we are quite positive.
So Abneesh, with this kind of a strong pipeline and Jawan already breaking all the pre-booking records, do you think the occupancy levels for cinemas could get back to the pre-COVID times?
Yes, absolutely. If you see the kind of numbers which Gadar did or say Jailer did, and before that, the very high ATP and occupancy in Oppenheimer and Barbie, I think that will happen. In India, if you see, there are 2 things. One is in big cities, very little entertainment options are there for the customer. So if it's a good content, customer is willing to go to the cinema hall because there is a 2 months of exclusivity before that same content is available on OTT or TV. So that's one thing. And second, VFX and a lot of these action masala movies. So that is truly enjoyable on the big screens. And that's one more thing I missed out was, see, earlier a lot of niche movies were being made. You just hire, say, Akshay Kumar and hope that movie will do well. The customer taught the film producers that will not work. Now, if you see for both Gadar and Jawan and even Pathan earlier and Jailer also, mass consumption, mass pot boilers is what works in India. The niche movies and just hiring Akshay Kumar or Ayushmann Khurrana, that will not work. You need to have for the lowest common denominator and have VFX, have a full masala movie. That is what Indians want, and that finally has come back. So that's also positive.
Positive, but the big question is, Abneesh, how much of it is in the price already? Because it feels like PVR went from 1300 to 1800 in a blink, because it was languishing around that 1100, 1200 mark for the longest time, and then there was this sudden spike. What's your target on the stock now?
So we upgraded our target price to 2210 from 2080. So it was an upgrade. We think that this will hit a new all-time high in the next coming months itself, and we see further upside to that. If you see this kind of a stock, we value at EV EBITDA times, and if you see EV EBITDA framework, it is hardly 11 times FY25 and around 13 times FY24. So it is not at all expensive. P multiple is not the right metrics for this kind of business, given expansion is happening, India, etc. Plus, it's a volatile business. But slight concern in the near term could be the Cricket World Cup. But good part is Inox is also, PVR is also showing some of those matches. So that is a small concern.
Have you with us? I just wanted to shift focus away from Jawan and talk about United Breweries as well, because there has been a leadership change that's happened there. Mr. Vivek has come in as the MD and CEO, and the street is fairly excited. Look at the stock of United Breweries, 5% higher. Do you think that's warranted?
Yes, it's warranted. See, in consumption plays, the top leadership is very important. Earlier, we had seen in Godrej Consumer when Sudhir Sitapati joined, the stock was up very sharply. Similarly, in Colgate, we have seen Prabha has transformed the company. See, in United Breweries, last few months, there was a vacuum at the top. There was uncertainty. And if you see in Q1, the results were also quite weak. They lost market share. The margins went down. So both things happened. There's a vacuum at the top and the results were weak. I would expect that with the 22 years experience at PNG and 3 years experience at Udaan, he will bring the required aggression in terms of getting back that market share, increasing focus on craft beer, premiumizing definitely with Heineken and the Kingfisher upper end also. I think, yes, definitely this is warranted, and definitely this is a good development for United Breweries.
Okay, on that note, Abneesh, we let you go. Thank you so much for making time and speaking with us. Time now for a quick break on the show. Don't go anywhere.
Back with closing trades right here on ET Now. Still holding strong for the closing trades in Coal India. That's your big buzzer in trade, almost scaling higher by about 7%. Why is the stock holding up? Let me take it across to Ashesha and find out exactly that.
Well, yes, below normal monsoon has led to surge in power demand and because of which coal availability has become a concern, and Coal India is gaining nearly 7% today. In fact, the stock is up 7% today but is up nearly 19% in the last 1 month. Power demand in fact grew by about 16%. Base power demand grew by about 16% in the month of August, while peak power demand grew by about 27% on a year-on-year basis in the month of August. Power demand has touched all-time high of 241 megawatt in the first week of September, because of which coal availability is a concern now. Coal prices are surging and hence Coal India is gaining in trade today. Remember, Coal India generates about 18% of its revenue from e-auctions, and because of this dearth, coal e-auction prices are expected to inch higher, which is a positive for Coal India. In fact, company has given production guidance of about 780 million tons in FY24, which is a jump of 11% as compared to FY23. Now, recent operational data for Coal India was also quite positive, where production rose by about 13.5% on a year-on-year basis. Supplies shot up, that too rose by about 15.5% on a year-on-year basis, and supplies to power sector in the month of August were also on the higher side. They were much more than the committed quantity, which rose by about 8% on a year-on-year basis. So on the back of surge in power demand, coal e-auction prices are expected to inch higher, which will be a positive. ICICI Securities meanwhile has come out with a note where they are maintaining their buy stance with a target price of 285. Today, of course, on the back of this news flow, the stock is gaining in trade.
For explaining to us why Coal India is buzzing in the trading session, a solid gain of around 7%. But Jonathan Shrizel is still with us. Thanks, Jonathan, for waiting by patiently. I just wanted to get a sense from you about urban consumption as well, because that seems to be firing here in India. What do you think is the best way to play that?
Obviously there's multiple ways to play it. The consumption story in India is very well represented. Personally, I mean, we tend to play it in various ways, be it by private sector banks. Obviously, that's sort of not direct consumption, but obviously that's an indirect way of playing it. But obviously the various consumer-related stocks as well. So there's a multiple ways of playing it. Obviously, one has to be careful between stocks that are more focused on urban versus rural consumption. But yes, there are multiple ways to play.
Okay, just looking at a couple of other stack of buzzers. PFC REC, of course, holding out well. There's UBL, we just addressed that stock. And then there is Page Industries also, which is going very strong, a good 4% of a move that you're currently seeing there. But yes, sectorally, some of the IT names as well are looking very good. Jonathan, do you think with the large deals that one has seen with some of the large IT companies, eventually revenue growth will kick in?
Yeah, look, the sector's done pretty well recently. Has obviously had a good move. The rupee looks like it's at the top of the range. Obviously, underlying business momentum looks pretty good. So I think, the IT names continue to look quite attractive. Yes, they've done well, but I think growth should be good going forward.
Recently, that stock is now almost quoting at 2,800. Would you still recommend people to get in and buy that stock? Jonathan, the question is for you on Larsen & Toubro.
Sorry, I missed that. Yeah, look, it was interesting, obviously, following the results, and the stock did come off quite aggressively following those slightly disappointing results. We've now recouped that entire move. Sorry, I thought you were talking about Infosys. Now, LMT has been extraordinary, the move you've got there. Sorry, with the LMT chart up. But it's the whole obviously capex cycle and everything going on there, and the news is pretty positive for the sector. It's obviously the big one to play in the sector. We had sold out of the stock about a month back, so obviously a little bit too early, but it's still a very good stock. But valuations are starting to push up a little bit on the high side. But obviously, if you want to play the capex story in India, it still remains probably one of the largest, most liquid ways to do that.
Sold out of L&T, what was the reason, and are you having a bit of a missed out feeling? And where did you park that money then? If you sold out L&T, what did you buy?
We actually we sold L&T to buy a stock elsewhere in the region, so we moved the money out of India. But Yeah, look, it's still, we still like the stock. It's still got a lot of other, a lot of drivers for it, but it's just done so incredibly well. But looking back historically, these stocks can carry on for some time and can go into overvaluation territory. But we found something a little bit more attractive outside of India on this occasion.
Sure. On that note, Jonathan, I mean, which are the other markets which are looking attractive right now outside India?
Yeah, look, obviously, there's various factors at play. I think when one's looking at other, if you like, call them emerging markets, China's clearly been the one which has been very difficult. The market has been very poor. The underlying economy remains an issue. And obviously the government has still not come out with a significant policy easing or stimulus measures quite yet. China looks very cheap, certainly compared to India. And some of the other markets in the region, be they developed markets like Japan, look quite attractive as well. So I think India will continue to do well. So we still very much like India, particularly on the medium to longer term basis. But in the short term, it's had it's obviously recovered, had a good run. Looks a little bit expensive compared to some other markets, but against history, it's not looking excessive. So we're not bearish on India at all. We do like India, but some of the other markets like China, Japan, and some of the other markets in the region do look quite interesting to us as well.
Okay. Coming back to India, though, what are the other spaces which are looking a little overheated? Many believe that a large part of the rally in some of the defense as well as the railway stocks could be behind us. What's your opinion?
It is extraordinary how well some of the capital goods and these engineering names have done, the defense sector names. Obviously, there's not that much choice, which has pushed it up. I mean, we continue to still, if you look at the sort of slightly laggards, some of the private sector banks, haven't done anything, well near as good as a lot of the other sectors, and that's still a very interesting area for us. So that's probably where we still have good weightings, and we still think there's good opportunity ahead.
On that note, we'll let you go. Thank you so much for making time and speaking with TT now. Time now to look at some of the stocks which are buzzing around on price volume action as well. Case in point being Cochin Shipyard. Of course, that's hit a record high today. It's been advancing for 4th consecutive month, and the volume today are almost 4 to 5x the 10-day average that we have seen on Cochin Shipyard. Similarly, if you look at Coal India as well, that's hit a 4-year high on an intraday basis. The volume is almost 6 times the 20-day average, and that stock has been advancing for the 6th consecutive session. That's the word coming in on Coal India. And lastly, Page Industries hit a 3-month high on an intraday basis. The volume is almost 3x the 10-day average. I believe the management met a few analysts, and the commentary is a bit positive, and that's why we are seeing this momentum. Kunal, from the list of stocks that I pointed out, Cochin Shipyard, Coal India, Page Industries, what's the top bet and your own closing trade idea?
So Page Industries looks good, Coal India looks good, and Coal India, I was actually looking at the comparison over the last 10 years, that whenever the stock is up some 6.5%, 7%, and it's very rare occasions for Coal India, I think only just 6 or 7 instances over the last 8-10 years for the stock price. We've seen that the stock has gone through another follow-through up move at least 2% to 5% on an average over the subsequent couple of days. So even as a short-term play, looks attractive for a bet of another 10 rupees broadly on the upside for Coal India. For the closing trade, I would actually look out for BHEL, even at current levels of 135 plus for the stock. Looks very attractive, has come back after a mild consolidation. So on a closing trade basis, would be looking to recommend as well as buy BHEL.
Okay, that's a closing trade on BHEL that Kunal is recommending. Naresh, any ideas from you?
So first would be HDFC Bank itself. The stock is turning around from that 1600 mark. 1580, 1600 tested multiple times. The largest weight in the index looks interesting. And the whole banking space, we are coming close to the bank Nifty on 45,000, which is very interesting. IndusInd Bank is giving a breakout, so that would be the other one which looks interesting.
Pull up the intraday chart of IndusInd Bank. That's definitely seeing a bit of a spike in the last few minutes if we can, because IndusInd Bank is the stock that we're talking about. And then pull up the intraday chart of VRL Logistics, Adani Power, Z Entertainment. These are the stocks which are seeing quite a bit of spike in the last few minutes, so keep all of these stocks on your radar. We'll spot a lot more buzzers and the stocks in news, but only after this very short break. Welcome back. Well, for the markets today, there's a lower flow within Nifty Bank actually. Pull up that and let's pull up the candlesticks charts for Nifty Bank and see in the last few minutes there has been active buying that seems to be happening in that. So IndusInd Bank is now up a solid 2%, Bandhan Bank, PNB, Axis Bank. All of these stocks are surging. We already spoke with Naresh and he likes HDFC Bank as well as IndusInd Bank. But Kunal, your view as well?
Yeah, I think HDFC Bank looks attractive. Even Bandhan Bank at 240 or 238 levels looks quite charged up. It's been holding on to this level above this 238 mark for quite some time. Also the 200 and the 50-day moving average respectively for the stock. So looks as an attractive bet. PSU banking is something which I would be heavily tilted towards because I would probably expect many of these PSU banking stocks, not especially the ones which are in FNO, the likes of Bank of Baroda, Canara Bank, etc. But even the mid-cap end of the segment, the Union Banks, Bank of India, etc. Even these stocks look very attractive on the charts, and I would expect a significant upside for these stocks over the medium to long term. So it's a matter of time frame over here as well as the risk appetite. For someone who has a higher risk appetite as well as looking out for these mid-cap names, I think the potential upside could be significantly high.
Right. Let's also welcome on board Mayuresh Joshi and talk about what he's making of the markets right now. Mayuresh, hi, afternoon. What are you making of this comeback in banks? And if one has to really tide this recovery in the banking pack, what would you prefer? Private, banking, PSU banking lot, and what within that?
Afternoon, Aisha. So again, I think the banks have been very, very resilient in spite of what we are seeing in terms of global macros. And even the local macro concerns that are now emanating. And therefore, if you probably look at the diversity in terms of how numbers have got reported, whether it's private or public, the numbers have been exceptionally good in the quarter gone by. Expectations in terms of the festival season in the second half will probably mean that the advances growth should continue on a very strong footing. Obviously, I think the kind of deposit traction that a lot of these banks have seen, the lack of liquidity in the system with RBI clamping down in terms of the reserve ratios will probably mean that NIMs might probably compress. But overall, I think the advances and deposit growth should be reasonable enough for the system as a whole. To top that up, Aisha, I think as the fact remains, the asset quality pressures have come up significantly for the entire banking system as a whole. Provisioning remains extremely strong for both private and public. And capital adequacy remains quite stable for the larger private and public banks and some boost that is coming through capital raises for the mid-tier PSU banks as well. Putting this in context, our system probably looks better placed, and therefore within the private space, we've obviously got HDFC Bank on our watch list. The bank has really done nothing, and therefore if you probably look at how numbers played out, they were a little bit conservative in their advances growth. Specifically in terms of being very, very cautious on the unsecured lending segment. But going forward, I think the advances growth should be very reasonable. With the merger that has probably come through, the access to deposits will mean that the compression in NIMs will be relatively lesser compared to the other banks within their domain or their market cap size itself. And therefore, the underperformance might have just got played out. HDFC Bank can actually turn out to be one of the big winners over the next few quarters. In the similar breath, within the public sector enterprise universe or the banking universe, obviously State Bank had a very decent set. Obviously, some numbers in terms of providing stability onto the balance sheet in terms of ECL was something that played out in this quarter. But banks like an SBI or even a Bank of Baroda should definitely be kept on your watch list.
Point taken. That's the word coming in as far as the private as well as the public banks that Mayuresh is liking at this point of time. You know what? Tomorrow is an important day as it is for the banking sector because that was the timeline of review for the ICRR or the incremental CRR that the MPC meeting had actually levied on the entire sector. What we are picking up from sources, and this is something Ankur, my colleague, had broken the story, that perhaps the ICRR might continue for a few weeks, but there's also a bit of chatter that instead of 10%, maybe the number will come down to 5%. Maybe that's what the street is baking in. In fact, if we can, let's go across to Ankur to get a sense as to what the latest details were on ICRR, because he was talking about how the meeting is underway and then of course the ICRR might continue for a few weeks. But then just shifting focus away from the banking sector to the power sector as well, because that's a space which has been seeing quite a bit of buying action, and not just, your pure play generators. There's a lot of action in the lenders, the names like REC, PFC as well. Now, Coal India is also seeing quite a bit of traction. Mayuresh, what's the view here on the power sector, and which is the name that you like?
Afternoon, Anisha. I think the sector has done phenomenally well. And again, the kind of surge that we've seen in power demand, lack of rains, power demand has shot up quite significantly the last few weeks. And again, as we know, October, November, the demand shoots up as the heat wave probably progresses across the country as a whole. Having said that, the entire power chain, Anisha, whether they are generators, transmitters, EPC players, financiers, have all probably done well. And there is a structural element to this. You're probably talking about the renewable part, increased 10x over the next few years. Take an instance, NTPC, they're expecting their overall nameplate capacities to reach 130 gigawatts over the next 7 to 8 years, out of which 60-70 will be contributed by renewables itself. So the kind of capex that will go in terms of incremental power capacities, the need for power cables, the need for transmission towers, the need for transmission lines, and financing all these elements put together will probably mean that the structural story for the power sector probably remains intact. Having said that, I think a lot of stocks have probably moved up. The likes of PFC, REC have probably moved up quite significantly. Dividend yield, again, is a huge comfort factor for all these stocks. And therefore, the momentum might continue. Fresh investments, pullbacks, anybody holding can definitely hold on. Within the public sector enterprise generating part, my own sense is that stocks like an NTPC, as an example, can definitely be kept on your watch list. As I said, incremental capacities coming through, expectations in terms of free cash flows actually improving over the next few quarters. And the yield factor remains very, very supportive as well. Power grid from the transmission part, the capacity capitalization to capex ratio remains strong. Incremental ROEs should improve going forward as well. And therefore, I think this space structurally very positive. Pullbacks needed on a few stocks like NTPC Power Grid can definitely be kept on your watch.
Coming in the power space, cap goods, of course, holding out very well. Page Industries has climbed up almost 4% right now. And L&T, like we've been flagging off, 28.44 in the futures now. That's again off about 4% on L&T as well. But Mayuresh, can the stock be bought, or can you add positions here at these levels?
Yes, on pullbacks, definitely yes, Aisha. And I think the new order that has come through is a huge boost because what you're seeing on the existing order book that L&T probably sits on, the orders that are coming through from the hydrocarbon segment are going to be margin accretive orders. By margin accretive, I mean they're going to be stable margins going forward. And as execution improves, the expectation in terms of the NWC, the net working capital, actually remaining stable is a given fact. The other element in terms of such a strong order win probably means that the kind of revenue visibility that L&T always had would continue, and the diversity in which the orders are coming through. And more orders will come through even on the domestic front before we hit the election mode by the early few weeks of the new calendar year, will mean L&T will gain more orders as it comes through metro or the infrastructure development work, even if India is concerned. And therefore, I think all the elements coming together and the incremental ROE should remain stable or improve. So yes, remain extremely positive on this stock, Aisha. Any pullback can be considered a good time of option.
Adding positions on L&T on pullbacks, but Naresh, what's the immediate target on the likes of L&T, United Breweries, and even Page Industries?
Indeed, because the last range was roughly say 200 points, a breakout target would be closer to 3,000 rupees in the short term. United Breweries has just given a breakout today after say consolidating for a long time. The previous highs is around 1,800, so that becomes a target. Page Industries similarly 43,500 was the previous high in May in the recovery, so that becomes a target, but is getting very close to it, so the risk reward is not great here. But L&T and UBL still remain a buy on dips.
That's the question, Mayuresh, on Page Industries. For the last many quarters, the stock actually has been disappointing with its earnings. Do you think the worst is over and one should look at Page Industries positively, or should one wait for a couple of quarters and that numbers to actually turn around before buying into this?
You're absolutely right. I think the numbers were relatively soft in the quarter gone by. And a lot of their peers actually did relatively better. Obviously, I think with the kind of franchise routes that Page Industries has at this juncture, the kind of brand presence that it probably carries, any recovery that comes through in terms of both volumes and price will get reflectively priced in as numbers start re-rating themselves. So by this, I mean that you probably need to give it one more quarter to see how Q2 numbers are playing out, what management is probably viewing the entire macro market to be. And within the space itself, in lieu of competition, how are they expected to play out both in terms of volume growth as well as their margin profile as well. So I'll wait out for one quarter's numbers because last quarter's number, Anisha, were really, really soft. They really need one solid quarter to and a very good management commitment to back up, to give us the view that the next few quarters are probably looking like recoveries on the path and a significant one at that. So I think this quarter's numbers probably will lay testament to the fact on how Page might actually perform. So I'll wait out for this quarter's numbers to be very frank.
Let's also address some of the losers today, and Tata Consumer definitely is one such case in point after the denial coming in from Tata Consumer saying that they're not buying stake in the snack maker Haldiram's, and even Haldiram's told us categorically yesterday itself when there were news reports indicating that maybe Tata Consumer could be looking at a 51% stake in Haldiram's. But that said, that stock has fallen about 2.5% odd today. There's also the cement pack, which is easing off a little bit. So Ramco, JK Cement are rank underperformers. There's India Mart, Manappuram. These are also languishing in trade, down anywhere between about 1.5% to 1.7% for both Manappuram as well as India Mart as we speak right now. Naresh, let's get a chart check going on Tata Consumer at 860 thereabouts.
So the longer term chart looks pretty promising. If we go back to the last top in 2021, it was closer to 880, 890. The top in say August this month was around 880, which it closed at yesterday. And over the last 1 year, there are multiple tops around the 860, 880 mark. So the dip today, we are back to the same prices almost, which was their day before around 840, 850. So it's a buy at current levels with a stop loss at 830. It could be a major breakout if it can sustain about 880 levels. So positive on the stock, could surprise on the upside going forward.
Take coming in on Tata Consumer, but since we are talking about Haldiram's, let me talk about the entire QSR space as well. Mayuresh, the street is divided. Of course, these stocks are trading at expensive valuations, 60 to 80 times, but the likes of Devyani International are doing quite well for themselves. There was a note from Macquarie this morning saying that maybe street is banking too much on the World Cup, potential. What's your take?
It's always been the case, right? Any sporting events that probably come through, the expectations of significant volume growth is expected to play out very nicely. Now, the World Cup is happening in India, Anisha, and the timings largely will be day-night matches. So the matches will end up around 11, 11:30 late in the night. And therefore, it should probably be favorable going by past records in terms of SSG growth. And a lot of more events lined up. You've got the Premier League football, which probably starts. You've got the Euro qualifiers as well, and a whole host of sporting activities lined up. So I think that becomes one reasoning in terms of volume growth for QSR stocks. But within this entire domain itself, Devyani's numbers were really good, both on a quarter-on-quarter and a year-on-year basis. Burgers relatively doing better than pizzas is what numbers probably suggest. And therefore, if you probably look at how Devyani has probably performed, better compared to its peers. So anybody can definitely hold on and ride the momentum that this stock is probably offering. What we probably like in terms of our global focus list, Anisha, because Haldiram was just spoken about in terms of the deal with Tata Consumer, the kind of numbers that were getting spoken for Haldiram in terms of valuations will have a rub-off effect on Bikaji Foods. And we do have a bias towards Bikaji Foods. Obviously, I think the numbers for Bikaji within the same space, whether it's namkeen, bhujia, packaged foods, the sweets that they probably have, are expected to grow at a very, very decent pace, in our opinion. Margins should stabilize between 13.5% to 14.5%. New capacity is getting added on. basically will cater to the new geographical areas. And they're seeing huge demand probably come through. So some sort of a rub-off effect in terms of what Haldiram's valuations are probably getting sought after might have an effect on Bikaji, and Bikaji's dynamics also within this domain itself are looking relatively. So I think hold on to a few plays that you have something that we like in Bikaji.
We spoke with Rishabh Sheth earlier today on the disconnect that one is seeing between what the large caps are doing and what the small caps are up to, and whether or not there is some overheating within the small cap segment. Here's what he told us.
You have to be the most cautious in the smallest names because there I think for whatever it's worth, the execution challenges are still going to be pretty high, especially companies which are maybe doing less than 100, 200, 300 crores of profit. I think there, if the valuations are at a point where you don't, you are expecting flawless execution for many, many years. So I think basically I would be the most cautious in the smallest name and then kind of less as you go higher up the curve. No, I think banks will do well. I mean, we have nothing against the banks. It's we always ask this question. I think it's more a question of there are opportunities elsewhere which are maybe more interesting. Structurally, banks struggle with getting past 17-18% ROEs even in the best of the times in terms of cycles. And I think from an investment cycle perspective, we are in a sweet spot in terms of the economy. So that we feel that there are other better opportunities. I'm sure banks will also do well. I think pharma and healthcare, we are looking more from a domestic standpoint, not so much from an offshore standpoint. Offshore, of course, most larger companies do have exposure. But I think it's the domestic which kind of makes us most bullish. We think that overall, the domestic healthcare will continue to grow. You will continue to see consolidation. The top players will continue to gain market share, at least the good quality ones. And I think it's a very long-term structural growth story. We are maybe at the beginning of it. I think the biggest change we've seen is in pharma is capital allocation. I think capital allocation for larger businesses have become much better over the years, especially over the last 3 to 4 years. And I think that's starting to show up in the health of their balance sheet. So as their balance sheets become more and more healthier, I think their ability to capture the domestic growth kind of continues to go up exponentially. And I think that to us is the most interesting part in the healthcare space. We think that, and that's what our portfolios reflect. So if you look at, say, a pharma or a telecom, or for that matter, media, and then, of course, bottom-up ideas across the auto components, even infrastructure companies like airports, sports, we see that at least next 1 to 3 years, we see a good opportunity. And we think that these companies are very well poised and they are also available at a reasonable price. So,
okay, so those were the top ideas coming in from Rishabh Sheth. But just coming back to our conversation, Mayuresh, wanted to get a sense from you about these softer sectors as well in terms of agri commodities like sugar, textile, even paper for that matter. Suddenly seeing quite a bit of spike. Would you be a buyer in any of these names or sector?
So we do like the paper and the textile sector, Anisha, and we do have a few names in our portfolio. Obviously, the stocks have moved up quite significantly, so you definitely need pullbacks on that. The reasoning is very simple. I think the paper demand expected to grow at 7-8% to 21.5, 22.5 million tons. The demand is expected to remain robust because of the festive season, specifically when it comes to paperboard, as well as writing and printing. Obviously, the single ban on plastics that has been put into use, as well as the expectations in terms of irregular rains. A lot of the unorganized paper mills, Anisha, use a lot of water and power. With deficiency being witnessed on both these elements, a lot of these unorganized paper players, or the smaller players, are going to get out of the system, which might cause some element of a supply crunch. And therefore, the better integrated players within the space, who've got resources with them completely integrated in terms of pulping, and vertically integrated in terms of the entire process. Players like a West Coast, Andhra, JK can do relatively better. Paper prices expected to move higher. And because they've got capacities in-house, input cost for these players will be relatively lower. So I think paper as a sector looks interesting to us. In the same breath, textiles as a space with the PLI scheme that is announced, the expectations in terms of the home textile market itself expected in the Indian context to move from 7 billion to 13 odd billion in the next 2 to 3 years. and the global market from 50 billion or to 60 billion has a huge opportunity. FTA agreements which are expected, if they do go through, is a huge plus in terms of our competitive intensity compared to a Bangladesh, a China, or even a Pakistan. And therefore, textiles as a space will do relatively better in our opinion. Obviously, I think the next few quarters are relatively tough from the export scene. You're seeing some element of softness being witnessed on the export front, but that should normalize in our opinion in the second half as festivities kick in. So I think better integrated, vertically integrated players here as well. Players like a Vardhaman, Indocount, KPR, and relatively better. Paper textile is something that we like at markets.
Right. Okay, that's the take coming in the textile segment. In fact, let's hear it out from Sanjeev Bhasin as well of IFL as to what are the stocks that he's betting big on right now.
Reliance from the large caps, Apollo Hospital, ICICI are three names which we are very, very bullish. You can add a Tata Consumer given that consumption and Starbucks will see a lot of traction with the G20 and the World Cup. One of my large picks, one of my mid-cap picks, Devyani has hit a new high. But I definitely think Tata Consumer has miles to go. However, like I said, this is the time to start to get overweight on Reliance, Apollo Hospital and ICICI. Apollo Hospital is seeing peer groups which are getting listed and their market cap move up, whereas this stock has done nothing. I think Apollo is headed to 5,600. You've seen Yatharth and the new listing get oversubscribed many times. And I think that, the average revenue per operating bed was 58,000 this quarter, which they are talking of 9% upside quarter on quarter or maybe yearly. So you can imagine the potential which insurance and health has given these hospital stocks. Hospital stocks are a no-brainer, so Apollo removes the roost. Reliance is telling you how it's encashing its other businesses, the verticals, what it's investing, the oil to chemical business. If you are re-rating ONGC, then Reliance has to be the next in queue. And thirdly, ICICI, the largest lender.
Those are the top recommendations coming in. Mayuresh, we're just closing down, just 2.5 minutes left. But within the manufacturing space, which are your top recommendations and pick?
I think if I have to club manufacturing and infra put together, L&T on pullbacks is something that we probably like at this point of time. And we are having a very close look at these oil and pipe companies. Something like a Jindal Saw remains on our watch list. Very strong order book at 1.4 billion between steel and carbon pipes, steel and ductile iron pipes, and pellet business as well. Debt has gone up for the acquisition that they've probably done and working capital requirements for the larger order book. But a large element in terms of more orders coming their way. We're just hearing the L&T order. We're hearing huge investments that the Algerian government will probably do, which might mean a huge scope when it comes to the oil and gas space for ductile iron pipes. Our own gas grid network that is expected to come up from 6 to 15% Nal Se Jal Yojana will be more demand for steel pipes over the next few quarters. And therefore, this space looks very, very interesting. I think within the broader infrastructure manufacturing space, do keep a watch on piping companies. They might do the little.
Okay, great to have you on the show, Mayuresh. We'll let you go on that note. Kunal, let's just get a quick strategy for the Nifty as well. We're closing above 19,750 on the futures at the high point of the day. What next?
So another 200 points is what I would expect, 19,900 on the index. So would maintain the long positions which we created a couple of days back. And my sense is that this time around, the Bank Nifty making a comeback above 44,700 mark is the added advantage which could probably push the index much higher.
Okay, I just wanted to quickly highlight the BTST ideas that our chartists have sent. So Naresh likes HDFC Bank as well as DLF. And Kunal, your two stocks?
Torrent Power is something which looks attractive for a target of 750, stop loss 705. And HDFC Bank also looks attractive for a target of 1650.
Okay, so those were the quick recommendations. HDFC Bank definitely coming on both our chartist radar, and that's because the stock has been doing well today as well. It closes with a gain of almost 1%. You have the advanced decline ratio, which was quite favorable. The Nifty also actually managed to scale up quite a bit, 19,700 by end of the trading session, and the large part of that momentum was purely on the banking stocks today. Look at an IndusInd Bank, an Axis for that matter, a Bandhan Bank. All of these stocks were doing quite well. Not that PSUs were not, because you had SBI and PNB which were doing quite well for themselves. The entire banking pack is what deserves mention. Separately, real estate stocks continue the up move. So today, of course, it was Lodha yet again. DLF, Sobha Industries, these were some of your top gainers. Stock-specific action, Coal India of course, and the rest of the public sector entities, the likes of Cochin Shipyard, Mazagaon Dock, even J&K Bank and other names from the public sector world were definitely excited. IRB managed to show quite a bit of momentum today, 8% gain coming in, while on the losing end you had Tata Consumers that was reacting to that denial coming in on reports of buying out Haldiram. But that's it. That's the trading session that we had at our hands today. But it's a wrap on this edition of Closing Trades from the entire team.